So the PowerPoint you should be able to see on your screen, and we're going to be discussing veterans benefits today, specifically focusing on the pension benefits. But we'll also discuss as well the disability compensation as well as the survivor's right to compensation or pension. Let's see. So the agenda, like I said, the veterans pension we'll focus on, and then also discuss the disability compensation and the survivor's rights to compensation or pension. So first, the most common benefit that people refer to when they're talking about veterans pension is the aid and attendance benefit. So we're going to walk through the qualification factors for that pension. So for aid and attendance benefits, there is criteria that you have to meet in order to be eligible for this pension benefit. And so we're going to walk through that. So one of the criteria is that the veteran must have served during a period of wartime as defined by Congress. Additionally, they must be permanently or totally disabled. However, the disability, the medical qualification, there's no criteria that requires that disability to be connected to your military service. So that benefit is under the disability compensation. So for the pension benefit, there's no criteria as far as that disability or the medical need being connected to the actual service. So the VA pension is a needs-based program, and that this pension benefit, it provides a monthly cash benefit to veterans that meet the eligibility criteria or their surviving dependent if the veteran is deceased. And that's something that we'll focus on a little bit more in the presentation, but the spouse of a veteran can only collect under this pension benefit if the veteran is deceased. Otherwise, it's the veteran themselves that has to qualify for the benefit. I always call the veterans pension aid and attendance kind of the best well-kept secret, because a lot of people are not aware of this benefit. Veterans think that in order to qualify for any kind of benefits, they must have a service-connected injury or have enough time served in order to have actually retired in the military and receive retirement benefits. So a lot of people aren't familiar with this pension benefit that's available. And it really is a benefit that can assist seniors when they are needing extra assistance at home or in a facility. So the pension benefits I have found for my clients are most helpful where they are looking at entering a personal care or assisted living facility, and they need additional income to help meet the monthly bills to pay for that level of care, or where the veteran is requiring assistance at home and now is paying for like a home health aide or someone to come into the home and provide care on a daily or weekly basis. And because of the cost of that, this pension benefit can help defray that high cost of the long-term care. So when we're talking about aid and attendance is just one level of the pension benefit. So there's actually 3 levels. And some people even break it into 4, where you have the basic pension, improved pension, housebound benefits, and aid and attendance. And so each of these different levels, there's a different monthly payment that would be paid. The highest amount, the highest benefit being the aid and attendance. But the basic pension is the base, and that is the lowest pension that's paid out. And that would be available to a veteran or the surviving spouse of the veteran who has insufficient income to meet their living expenses, and they're over the age of 65 or 100% disabled. Then the household benefit, this one is designed for a veteran or a surviving spouse of a veteran who is disabled and substantially confined to their home, so they're unable to leave the house to earn an income. Then the aid and attendance, like I said, which is the highest level of the benefit. This is designed for the veteran or the surviving spouse who, let's say, resides in an assisted living facility or a nursing home or requires the regular aid and attendance of another person. This could also be where somebody is coming into the home to provide that level of care. And they cannot perform 2 out of the 5 activities of daily living. This is presumed if the veteran or the surviving spouse of the veteran is blind or in a nursing home. So some more eligibility requirements. So along with the wartime service, you have to have served at least 90 consecutive days of active military service, with just 1 day of which falls during a period of wartime. Additionally, your discharge must have been other than dishonorable. And again, that medical criteria of permanently and totally disabled at the time of application, which disability must not, again, no willful misconduct of the veteran, and a veteran over the age of 65 is presumed to be permanently and totally disabled. So if you're over the age of 65, you're going to meet that criteria. So the time period of service for the VA pension, so only veterans with service, again, during a period of war are eligible for the non-service connected disability. Service in a combat zone is not required. So again, it's just 1 day during a period of wartime with those 90 consecutive days. And the veteran only had to serve during a time designated as a period of war by Congress. And those periods, I have them here on the slide, but you can also, if you go to the VA's website, there's a chart that lists all of these out. So these are the periods of wartime as designated by Congress that in order to qualify for the VA pension, any of those 3 levels, the base, the homebound, or the aid and attendance, your 90 days of consecutive service, one of those days must fall during one of these periods of time in order to be eligible for that benefit. And again, so these dates can all be found on the VA's website. So those are the criteria as far as the medical eligibility and the service, as well as the discharge. And then, of course, with the VA pension aid and attendance, because this is a needs-based benefit, not everyone is going to qualify if they meet the service qualifications or the honorable discharge or other than dishonorable discharge criteria and the age or disability criteria. You also have to meet the income and asset threshold, which when you look at what the rules are now, thankfully there's a bright line rule. So it used to be prior to the rules, which were established in October of 2018, prior to that, there were no bright line rules when it came to what the qualifications were for income and asset limits for the VA pension aid and attendance. But now we have a bright line rule. So we know exactly what the VA is looking for in order to meet eligibility criteria. So there's an income qualification factor, an asset qualification, and then you combine those to get the veteran's total net worth. So for income, what does the VA look at? So all income is countable unless it's specifically excluded. And countable income cannot exceed the maximum annual pension rate, which I'll show those to you in a slide where you can see all of those rates. And then countable income is reduced by the unreimbursed medical expenses. And that's where you get to the qualification factors quicker, where somebody is actually requiring care either in their home or in an assisted living facility, because the money that you are paying out for medical expenses is deducted from the countable income. And so that is important when we're looking at what is the total net worth of the veteran as far as eligibility goes. So examples of medical expenses that can be deducted when we are looking at what the veteran's income is and then deducting the medical expenses. So nursing home costs, assisted living costs, in-home care costs, premiums that you pay for either Medicare or supplemental insurance, as well as medical supplies, prescriptions, co-pays, etc. All of those things can be deducted from income. You just have to show that they are unreimbursed expenses. So of course, if you pay a premium, but you have, for example, a pension that reimburses that cost of the Medicare premium, then that would not be a deductible expense because it's reimbursed. So I mentioned this, I mean, I say new rules, but this was a few years ago, so it's not so not so new anymore. But as far as, I think that this was a really good change for the VA pension, was to finally have some bright line rules so we know what we're dealing with, because they're more specific as far as what the qualifications are, as well as specific when room and board at a care facility other than a nursing home may be deducted from income as a medical expense. So generally, if it's assisted living or personal care, it can be deducted unless the facility like bills it separately. However, where you have like an independent living facility, that is not going to be deductible because that's actually just room and board, and it would only be the expenses that are actually deemed medical. So if you pay for ancillary services, then those may be deductible. The other big change that happened that might not be as good if you're thinking about the VA. So the VA used to not have any kind of look back period for gifts or asset transfers, but they did institute such a look back period, very similar to Medicaid, as far as making sure that people are not doing things as far as like giving away all of their assets and then looking for qualification for the VA pension aid and attendance. It's the same thing with Medicaid. You can't give away all your assets and then request that the state pay for your care. So there are rules as far as look back. So there now is a look back period of 36 months when applying for any needs-based pension benefit. And again, that look back is only for this veteran's pension. It would not apply for the retirement aspect of the VA pension or for the disability compensation. This is just for the veteran's pension that there is a look back, and that's because this is a needs-based benefit. So any asset that was transferred for less than fair market value during that 36-month period immediately preceding the pension application will result in a penalty period. However, the penalty period will never exceed 5 years, and the penalty is calculated based on the maximum pension under the VA. So there is a way to know exactly what that ramification would be if you would gift assets away. So that's important to know if you're considering applying for veterans pension, is to make sure that you're aware of that penalty period and know whether you had any transfers or gifts that would be a disqualifying factor or institute a penalty period. So there are some exceptions to the penalty, just like with Medicaid, where there are certain things that, you know, if you made certain gifts or certain transfers, there are exceptions or waivers, hardship waivers, or exceptions to those transfers. The same thing with the VA. So there are some exceptions. So for example, no penalty will be assessed if the transfer was to a trust established for a child who is incapable of self-support prior to the age of 18. So that would be where you would have a minor child who is not able to self-support. Potentially a disabled minor child would also qualify under this, where they need to be supported by you. Also, there's no transfer penalty imposed if the claimant's net worth would have been below the net worth limit already, regardless of the transfer. So for example, if your assets were already under the net worth amount, which we haven't gotten to yet, but I'll explain that to you, and you transfer assets whereby you would already be under that limit, there is no penalty imposed for that. So there's only a penalty imposed if you transfer assets that are above the asset limit to get yourself under the limit. Additionally, a claimant will not be subject to a penalty period if the transfer was the result of fraud, misrepresentation, or unfair business practices related to the sale of financial products. So that's important to know. Just like Medicaid has something similar as far as, you know, if money is stolen from you or you're defrauded, you do have to show reasonable measures to recover that. But the VA has that exception. Additionally, only transfers that occurred on or after October 18th, 2018 are subject to the look back. So if you made gifts prior to that date, then there is no clawback on those gifts. It's only for the gifts that were made on or after that new rule institution. The other thing that was changed for how the VA looks at annuities. So the VA changed the rules on annuities, and annuities may be penalized. Again, annuities purchased on or after October 18th, 2018. So annuities can be penalized if the annuity can be liquidated. Then that would be counted as an asset. If the annuity cannot be liquidated, then distributions from the annuity are considered income. If the annuity was purchased during the look-back period, then a penalty will be imposed. So that's important to note. So when we're looking at calculating the penalty period, I mentioned that there was a maximum of 5 years that they could penalize. And the penalty is based on what the pension amount is. So in 2020, this amount is the $2,266. And that would be the amount. So you would take the total gift and divide it by that number to determine how many months you would be penalized for that gift. If the gifted money is returned, so if it is ungifted, then the penalty period would be recalculated. Okay, so then let's talk about how the VA looks at net worth. Like I said, now we have a bright line rule. And really, when you're thinking about how net worth is looked at, the VA is looking at the total sum of the claimant and the claimant spouse's assets, if married, and plus looking at the income. And this would include all income. So they combine both of those to determine what the net worth would be. So the amount for 2020 that's set through December 1st is the $129,094. And this number does increase each year with the Social Security benefits. If the veteran or the other claimant has net worth that's over the threshold and doesn't qualify for benefits, they can spend down by purchasing goods or services for fair market value. So there is a way to spend down for VA benefits, just so you're aware of that. You must be careful on how you're doing that, so as to not disqualify yourself from benefits or to have any kind of issues as far as instituting a penalty. And again, just like with Medicaid, both the veteran and the veteran spouse's assets are counted. So that's important to note. So the other thing to note is a primary residence, or the homestead, as the VA refers to it, is an excluded asset, but they limit this. So they say that there is a 2-acre limit imposed on the homestead. If the claimant's homestead is over 2 acres, then other rules may apply for the value of the property to determine the value of those excess acres and bring them into the net worth calculation. The value of personal effects suitable to and consistent with the reasonable mode of life are also not included in the asset calculation. So what does this mean? This would include personal transportation vehicles and household goods. So the VA does not make you get an appraisal of all of your household goods to determine what the value of those are. So those are an excluded resource. The annual income of the claimant and the certain dependents is included in the calculation of net worth, like I explained. However, reasonable and predictable unreimbursed medical expenses are deducted from the income. So that's where that list comes into play, where I explained the different things that are deductible, such as the nursing home costs, assisted living premiums, etc. So this is just an example so you can kind of see how the net worth is calculated. So where you have a veteran that has assets that total $117,000 and then annual income of $23,000, the veteran's total net worth would be $140,000. So he or she would not be eligible for VA benefits because their assets plus their income exceed the net worth limit. So instead, then they would have to show either unreimbursed medical expenses that bring that income down. So if they're paying, if the veteran, if he or she is paying for an assisted living facility or a nursing home, most likely then the income is going to be significantly reduced and they would qualify for the VA aid and attendance. Or potentially we would engage in a spend down to bring the assets down below that net worth limit of the 129,094, so they would be eligible for benefits. Here is the chart for the 2020 rates for the VA aid and attendance. So there are different pension rates for the veteran versus the surviving spouse of a veteran. And you'll see you have here the lowest base pension, which is the veteran that has no dependents. Annually, the amount would be $13,752, which is a monthly amount of $1,146. And the VA website has a chart that has all of these numbers listed out, and they are adjusted each year. So you'll see it graduates up to the highest amount, which is the veteran requiring aid and attendance that has one dependent. So for example, a veteran who has a spouse, and both are alive, and the VA or the veteran is the one that's qualifying for the aid and attendance, then the maximum amount that they could get per month is the $2,266, which is a good income stream for somebody who needs some extra money each month to pay for care. So it can be very significant. You know, an annual amount of $27,194. Then if you look at the next chart, this is the chart for surviving dependent. So this would be where the veteran is deceased and the spouse is the one applying for the pension. The amounts are reduced. So you can see the highest amount, if the spouse is not remarried or has no dependents, the amount they would be getting would be the $1,228 per month. So $14,742. If they have a dependent, then it would be the higher amount, the $1,464. Okay, so that's the VA pension aid and attendance, which, like I said, is the benefit that states, you know, you don't need any kind of service connected injury or disability to be able to receive it. You just have to meet those other criterias. Then I'm going to briefly talk about veterans' disability compensation. I will tell you that most of my practice is in the pension benefit. I don't help veterans apply for disability compensation. There are attorneys that specifically practice in this area. So I can always refer you to somebody in that area if this is what you're interested in. But my practice is basically on the pension benefit. So the disability compensation, just a kind of brief overview of how this works. So the disability compensation is a tax-free monetary benefit that's paid to veterans with disabilities. And the disabilities are the result of a disease or injury that occurred or was aggravated during active military service. The compensation is the benefit paid to the veterans who have the disabilities incurred or, again, aggravated during active duty. So the disability does not need to be related to combat or a job held during active duty. Then there are ratings. So the VA rates you in increments of 10%. And based on your rating, that's how much you are compensated. One thing to note is that you can get re-rated. So I have some veterans who are rated at a certain percentage and getting a small amount of compensation. But then as the disease progresses or as their health continues to fail, they can get re-rated and that percent can go up, and so they can receive more of a monthly benefit. The monthly award is directly related to the percentage of the disability. So the higher the disability, the higher the monthly award. And then if you're rated 100% disabled, the VA will actually pay for your care in a VA facility 100%, where you do not need to pay anything if you are rated high. So what are the requirements for the disability compensation? So you must have a service-related injury. You are at least 10% disabled by an injury or disease that was incurred in or aggravated during the active duty or active duty for training or inactive duty training. You must show evidence of a relationship between your disability and the injury, disease, or the event in the military. So you have to show the connection. And you do this through medical records or medical opinions that are required to establish this relationship. If you have been treated by the VA for the disability, that makes it easier to establish that connection because they're going to have the records already. But you need those in order to establish the connection. The important thing to know with the disability compensation, which is what I have talked about, is the main difference between the pension and the compensation is that there are no means tests. So there's no asset or income thresholds for the disability compensation. So for more information, you can go to the VA website. There are also injuries that they have listed that receive direct compensation. So it's important that if you think that you may qualify for this benefit, to go on the VA's website and kind of see what those criteria are. I do like to mention, because I used to get a lot of phone calls about this. Again, this isn't something that I practice in regularly, but there are rules regarding PTSD that are important to note. So in 2010, there were new regulations which were instituted to make it easier for veterans who suffer from PTSD to actually qualify for the disability compensation. So these regulations require that the veteran be diagnosed with PTSD, and additionally, the symptoms must be related to a traumatic event. So the stressor for the PTSD must be related to fear of hostile military or terrorist activity. To begin the disability compensation process, you must first receive the diagnosis. So that's important for veterans to know, is that you must actually have a diagnosis of PTSD. You then must present the documentation and evidence that you qualify for the disability compensation based on the eligibility requirements. My opinion is that it's better to go to the VA to receive the diagnosis, but if you're having difficulty doing that, you can go to a private doctor as well. But the VA, the way the VA works with the records, if you can get the VA doctor to diagnose you with PTSD, then that makes the process go smoother. So here are some resources for PTSD. There's websites and also the Coatesville VA Medical Center. That would be a good place to start. And like I said, you can contact a private mental health care provider as well. You don't have to use the VA Medical Center, but in my opinion, it does make the process easier for applying for the compensation benefits. Okay, then I just wanted to talk a little bit about the survivor's rights to compensation or pension. So this is where you have the veteran is deceased and where a surviving spouse or dependent child is trying to apply for benefits. So just a quick overview. The surviving spouse or dependent children of the military personnel who they die on active duty, or surviving spouse or dependent child of a veteran who dies as a result of a service-connected disability are eligible for a benefit called dependency and indemnity compensation, which they abbreviate DIC. Additionally, low-income surviving family members may be eligible for the death pension or the improved death pension, as well as additional allowance for household aid and attendance. So there's kind of those two primary benefits, the dependency and indemnity compensation, as well as the death pension. Those are the things that I wanted to cover today. I didn't really talk about retirement benefits, but of course, those are outlined based on the time in military service, and then your spouse, depending on what selection you chose when you retired, may be eligible for those retirement benefits as well. So that was everything that I had for the presentation today. I don't know if there's any questions.
feel free to unmute yourself to ask any question if you'd like to.